Joining us now on what the company is doing to navigate its business through COVID-19 is Brinker International CEO Wyman Roberts. Wyman, welcome.
Thanks. Good to be here.
Stocks up 4.5% to my eye. Also this morning, we've got some news on Fat Brands looking to buy Johnny Rocket. So some M&A happening in your space as well. Give us a big picture. What does this mean? Because you had some encouraging things to say on the call. We see some companies making investments. What's going on?
Well, obviously the pandemic had a huge impact on casual dining restaurants where we had to close our dining rooms. And so the quarter started off pretty rough. But as the pandemic kind of got under control and we were able to get back into our dining rooms, even at 50% capacity, with the investments we've made over the years in technology and our embracing convenience with delivery and takeout, we were able to grow the business nicely through the quarter, which ended in June. And we found June down about 10%, 11%. Into July, we got even stronger. And there's some real bright spots with regard to the Chili's brand, especially where we see in the 84% of our restaurants that have dining rooms open, we were only down 3.8% in July. And we have about 36% of our restaurants that were running positive comps.
Wow.
And so that's a combination of, again, leveraging the strategies that we put in place multiple years ago to address the consumer need and that are working even stronger during the pandemic, as well as putting some new innovation in. And that was really with the rollout of our first virtual brand.
Yeah, tell me about that. It's Just Wings. Rolling out a brand during this period of time seems gutsy. What's virtual about it? Why is it a virtual brand? And what's it going to do for you? Yeah,
well, I think, first off, just on the strategy of being aggressive during these times, I think that was our approach to begin with. We didn't want to just hunker down. Our objective was to keep as many of our team members employed as possible, and to use this as an opportunity to continue to take share and position the business even stronger in the pandemic and obviously on the back end of the pandemic. So what we've done is we were looking at a lot of different opportunities for quite a while now. The industry has been kind of pegged with being overbuilt, and we kind of came to the conclusion that maybe it's not overbuilt, it's just underutilized. And so we were focusing on how to get better utilization out of these great investments we already have. So a virtual brand is a brand that you can only get through our partner, DoorDash. It's a delivery-only brand. We rolled it out to over 1,000 restaurants in one night, and it's doing phenomenal. It offers a great product for those folks that want wings and great curly fries, and for those that are looking for a little indulgence, a fried Oreo dessert. So it's been well received. It's hitting all of our objectives. We think we've got a $150 million plus business within the first year with really little to no capital investment.
Wyman, Julie Worston here. The fried Oreo sounds pretty intense. A question, though, about how much that new brand is really about the rise of delivery, takeout orders, and the fact that maybe the restaurants, as you have them now, are not designed for that takeout business, just to be sort of standalone, doing more takeout and less in restaurant. How much do you see takeout being a trend that continues over the rest of this year and even post-pandemic?
Well, I don't think we'll ever go back, Julia, to the mix that we ran prior. Just too many people have been exposed, and you've seen the numbers on kind of how far ahead of the projections the delivery companies are, and you've just got so many more people that never tried delivery that now have experienced it and like it. So we think it will continue to be stronger than it was pre. Right now we're at about 50-50, and that's probably a little influenced by just not having full dining room capacity open. So we think it'll probably drop back down a little bit, but it's never going to go back to the 80-20 that it was prior. And we're fine with that. We were embracing delivery and convenience before the pandemic hit. We've got the technology to make it seamless for our guests and very operationally friendly for our restaurants. And that's a key to be able to, from a cooking perspective, our guests don't know if the order is coming from a DoorDash website, our website, or from the dining room. It just shows up in the kitchen, and then they make the food, and then we just either put it on a plate or put it in a packaging, and it goes out.